What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at Chainlink. So right now we're sitting at around $8.70. This is obviously after this massive crash where we've seen the entire crypto market decline. But what we want to talk about today is why Chainlink is sitting where it's at right now after this crash. So on a video we did on April 29th, we said that if Chainlink, by the way, it was sitting at around $13.50 or so at the time. If Chainlink continues down, so if the market begins to decline, which it did, obviously, you're probably going to see Chainlink head down to around $8.50. And we said somewhere between $8.50 all the way down to around $6.75. All right. And the reason for that is this metric that we're looking at over here on the right. This is the volume profile visible range. And what this metric tells us is essentially how much volume has been traded at any given level for the asset. And the more volume that has been traded at any given level signifies that there is statistically likely to be more holders at that particular level. So more holders is going to essentially lead to a place where you're going to hit a level of support there, right? Because if you have a massive number of holders at a particular level, it's going to be harder for the price to drop below that level. The same thing goes as we move to the upside. If you run into a place like right around here, which is above us now, if you run into a place where you have a large number of holders, which you can see right here, that becomes a level of resistance in the future. These levels are relatively, they're fairly large areas of support and resistance, but they're not insurmountable. So that means we could easily go above these levels if the market turns around to the upside, but we could also break through these resistance levels to the downside if we continue to see downside pressure in these markets. All right, so we were saying that we kind of thought that the price will very likely head down to this level if the market continues downwards. But we're here now, we're in this level. We need to consider, because on this channel, we're investors. We're not emotional. We're not going to sit here and be emotional about our investments. They go up and down throughout market cycles. It's just how it is. So we need to know, where can we potentially move to the downside from where we're at right now? And what I want to show you is this level, because ultimately you have to keep in mind, the market looks ugly right now. The general market looks ugly. There's macroeconomic uncertainty everywhere. Okay. And we're talking globally here. And, you have serious geopolitical events going on right now that are influencing these markets, in addition to runaway inflation, all the different actions that the Fed is taking right now that are influencing the markets. They're influencing investors, driving them towards risk-off behavior. And that's just going to have an influence on the market. Now, the thing I want you to keep in mind, so there's two things, and this is kind of an aside here, but the thing I want you to keep in mind is we are investing in Chainlink, the Chainlink network, not for its short-term potential. Chainlink's short-term potential is relatively limited. And why is that? That's because we are essentially tied at the moment without, CCIP. We don't know what that will be yet. So we have high hopes, and we can continue to have high hopes, but we're not going to go counting our victories until it's actually out and we're seeing how it's being used and how it's being implemented and how successful of a protocol it is. So we're not even going to take into account CCIP right now. But what we need to do is remember that Chainlink is tied essentially to the DeFi market. So as the DeFi market grows in size, it grows in value, and the total value secured by the Oracle network Chainlink, as that grows, so too does the value of Chainlink, particularly when you take into account staking. And that's for all of the reasons that we've mentioned in previous videos. So if you haven't seen my videos on, assessing fundamental analysis of the Chainlink network, and I've described why it is that this is one of the most undervalued networks in all of the cryptocurrency asset class. So we are investing in this asset for its long-term potential. Because if you believe in DeFi, if you believe in the cryptocurrency asset class, you therefore have to believe in Chainlink, because it essentially allows the entire DeFi space to operate in a reliable, secure, and accurate manner. So if you expect that DeFi will continue to grow, you therefore by default also believe that Chainlink will continue to grow, because it has no competitors. And that's not hyperbole. It truly has no real competitors. Okay, so that's kind of an aside. The second thing I want to point out before we talk about this price further is the fact that you have to remember, when bear markets come around, it doesn't matter if you are, look back to prior market crashes. And I'm not saying that we necessarily have to have a market crash here, but look back to any prior bear market and think of the asset with whatever at any given time with the best fundamentals. And look at what happened to the price of that asset during the setting of the bear market. It crashed, and it gave long-term minded investors, not short-term minded investors. It gave long-term minded investors access to an asset at just massively discounted prices to any price that it's compared to in the future. So bear markets are essentially just a segment of the market that cleans out all the speculation. It removes all of the investors who aren't here for the long term. And we've talked about how that basically during the bull market, during every bull market, it's going to drive fundamentally strong assets up to prices that are unsustainable. So that gives you as the investor an opportunity to enter into assets with strong fundamentals that are extraordinarily likely to recover and then go to much higher levels in the next market cycle or whenever the next run in the market comes along. Things like this can look bad in the short term, and they always do look bad in the short term. I gave an example in a video the other day where I showed Amazon went down something like 90+% during the 2000 crash. But Amazon had strong fundamentals. It was, it was an investment that wasn't necessarily apparent to everyone, just like Chainlink. Chainlink has so much FUD around it for people, from people that just have no idea what they're talking about. And that gives you as an investor an opportunity, because when you're looking at the fundamental value of the asset, Chainlink has, in my opinion, and I think many people that are informed on the issue itself, Chainlink has some of the best fundamentals, and perhaps the best fundamentals out of any single asset in the entire asset class. Because every DeFi protocol out there could go away and be replaced by something else. But at the end of the day, Chainlink is basically the only Oracle network doing what it does now. So you have a unique opportunity here, because the entire DeFi space relies on this network. If you don't have this network, you don't have reliable data feeds. If you don't have reliable data feeds, you don't have DeFi. All right, and I'm just saying DeFi here. There are other facets of the crypto space that also rely on Chainlink, but DeFi is the most obvious, the most apparent. Okay, so that's just to reiterate why this asset is such an important, or this network is such an important asset to the entire cryptocurrency asset class, the entire digital asset class. So with all that said, we still, none of this matters in the setting of a bear market. Fundamentals matter for investors, but we're coming off of a bull market. We're coming off of a bull market, and we still have some of these speculative prices. And there's going to be capitulation. There's going to be fear. There's going to be doubt, and there's going to be selling. It's just how it is. And you also have to consider that during a bear market, you're not going to have just mass quantities of buyers coming in. So the price is just naturally, it may not go straight down, but depending on how long that this downtrend continues, it's very likely that the price will start to continue to move down. And so we need, as investors, to consider where this may be. So we can look here, and you see that we have this support level here that we discussed from around, realistically, it's about 880 or so, all the way down to $7. Now, some of this volume has come in the recent days since we've been trading down in these levels. But this level was here before, and that's why we called out this level as being the next likely location if the market continues down. But you'll notice below that, below that $7 level, all the way down to around here, down to this $5 level, there's not much volume. But then you have a ton of volume. You just have a massive quantity of volume. So there's very likely to be a strong support level down at this $5 level, all the way down to around $3.20. But we're talking about, more severe examples of where this asset could correct to. And quite frankly, if the market continues in a downtrend, I do expect that it will head to this level. Now, a lot of people always say, well, look at how strong of an asset it is. How could it possibly get there? It doesn't matter. How could Amazon lose 94% of its value and then go up 64,000% from there? It's because in the bear market, you have to remember that it's kind of all bets are off. Even the best assets will get sold off in that time. You can look at Microsoft was sold off. Anything you can think of, it underwent a sell-off. When it is at levels like this, these tend to be great buying opportunities, but that doesn't mean it can't go down further from here. Think about it. When Amazon was down 70% from its all-time high, it still went down a huge quantity. All right. And, when you think about it in terms of percentages, so if we look at from the top here, right now we're down about 85%. Okay. Now, if we were to go down to this lower level, that's about 90%, right? So only a 5% difference. But this is why you need to keep it all in perspective, because that's down an additional 5% from the all-time high. But from the low where we were at right now, it's down another 40%. Okay. So the difference between that 5% from the all-time high is actually 40% from where we're at right now. So if you were going to enter into the asset right now, you have to keep in mind that you still have a lot of downside. But if you're long-term focused, all you have to do is look to the last market cycle to see that back in 2018, things like Bitcoin and Ethereum recovered and then went to new all-time highs, like we expect Chainlink to do, because they had strong fundamentals. Chainlink is the same type of thing. It is the infrastructure of the entire crypto market, essentially. So when you're, this isn't financial advice, but when I'm thinking about what I'm going to invest in a bear market or in a massive correction like we're seeing now, is I think about it by dollar cost averaging. I'm not going to just FOMO in to the asset right now. I'm not going to just take all my money and put it in a Chainlink at $8.60 just because it's down 85%. Dollar cost averaging is the best way, in my opinion, to be getting into the asset during a bear market, because there's always more downside. Even when we're down at this $3.15 level, if we went that low, if we were to go that low, you could still head down to this level down here, this next level down at $2.32. And from that level, if just from the middle of this range here down to this, that's another 40%. So if we were to go down to that range from where we're at right now, that's 40%. And then another 50% from there. So there's a lot of downside potential still in this market. That doesn't prevent, or, that doesn't change the fact though, that Chainlink is an excellent investment at $8.60. Ultimately, if you're trying to maximize the quantity of Chainlink you can get, if you believe that the market's going to continue heading down, dollar cost averaging is going to be your best strategy in the setting of market uncertainty, because it's going to essentially reduce your risk. It's going to reduce your risk of investing at $8.60, which in the long term is low, but in the short term, it's very high. So that's just something to keep in mind. It's just my perspective on Chainlink, and I'll leave a link in the description below to the video I made detailing, all the fundamentals of Chainlink and why this is one of the most important assets in the entire cryptocurrency asset class. So that's it for this one, guys. Thanks for watching. Until next time, as usual, see you.